This is Pre-Market Prep. I'm Brianna Valesky in for Joel Elconin. We're joined like we do every Monday morning by Scott Redler. He's the Chief Strategist at T3 Live and T3 Trading Group. Scott, thanks for coming on the show today.
Thanks for having me. How are you feeling?
Well, I'm feeling kind of patient. We're all looking at the Fed meeting coming up later this week. It's a quiet earnings week, so I'm just kind of sitting back right now and trying to figure out what these markets are thinking. What are your thoughts ahead of our Fed meeting?
I'm thinking somewhat similar thoughts. You have a very, very tight range now. Probably for the past now, what is it, almost 3 weeks that it's been built
Mm-hmm.
ever since the market broke down in late August. Lots of traders like myself are trying to figure out what's next. So the beauty of it is at least we have this tight range ahead of an event. So this way, when we see it try and resolve without having to guess, we could pretty much figure out which way to jump on it. So having levels mapped out ahead of time is probably the best way to go, as well as having a list of the go-to names to kind of see how they're acting before the market tries to resolve whichever way it tends to do so.
So what are some of those go-to names that you would look at?
Well, you look at Apple today. Apple's up.
Of course, yeah.
Apple came out with news. It was in front cover of Barron's. But the important thing, people like Redler, why you long Apple? Look at the chart. Look at what it did on Friday. Apple actually broke above last week's high on Friday, well before any other indices. So for the first time, pretty much since the August 24 lows, it actually showed some relative strength. So I love to play relative strength. I also like to be long Apple when it's acting well. So I got involved on Friday, and now it's up almost 2%. So at this point, if you did go long because it showed you some relative strength Friday, maybe you sell a little bit for a trade and then see how it acts as it comes back up to resistance closer to 118. So it'll be interesting to see whether Apple holds today's gains or not. And, with the Apple up 2%, the sliders are pretty flat, so it's really not having so much of an impact as of now. Some other go-to names, I guess, you could look at Google and Amazon. Both of them are very tight. Both of them reclaimed some moving averages last week. So if maybe Google can get above 660 and show some traction, it'll show some strength in tech. Amazon also, just like Apple last week, almost closed on the highs of the week. So that's got some room to 540. I would say Facebook has been a go-to name recently. It's one of the few stocks above all its moving averages, not below it. It's actually up at pre-market. Maybe there's some room there till about 94-ish. So there are some names acting pretty well. You can also throw Under Armour, Nike, and Starbucks in that mix and just figure out whether or not there is any kind of leadership that traders can gravitate towards to help the broader market either go up or not.
You mentioned Apple, got that a little bit of a Barron's action. Another one was Alibaba. Barron's saying that Alibaba might fall 50% because it just doesn't agree with the valuation. Have you been following Alibaba at all lately?
You know what? I was very involved in Alibaba way back when. When it first came public and it triggered above 92, it had that run up to 120. That was great. It was above all moving averages, acting technically well. And then, then it basically broke down. And, ever since I think it broke below 110, a lot of us tried to just kind of back off it because, high valuation stocks, if it's not above momentum moving averages, you don't want to be overly involved. And then if you remember that earnings report that came out, I don't know, what was it, back in that April of last year, like actually May 7th, it finally had that big gap up. And I think we went back to looking at that around 88, 89, and then, had one of those breakout failures. And then I think that day when it broke back below 88, since then, I don't even think I really looked at it because it's been so weak, and I'm not I don't trade well leaning on names and shorting names, but it hasn't been a great technical setup in multiple months. So for Barron's to come out now, and say it can go 50% lower when it's already almost at historic lows for itself, I don't think they're
Right.
providing that much value.
Yeah, absolutely. Another stock popping up on our radar this morning, Mobileye, got a little bit of positive comments from analysts. And you mentioned Mobileye in your morning note. Can you tell our listeners what you're seeing in this name?
Well, ever since the market started correcting in late August, they come after everything. They come after all high valuation names. Usually they don't let anything, uh, trade higher, especially if it's somewhat of a story. And even though the story has panned out that earnings have been increasing, so I've been watching a lot. it technically broke down when you had that false breakout around 60. And then part of my rules are if you're a momentum trader or a swing trader, you don't hold the stock that's below 8 and 21 days. So when it broke 58, I think traders were probably like, okay, then I got to get away from it. But then that was well before the big drawdown into the 40s. So anyway, Citron came out with a piece on it last week, bashing it. So it's good to see some analysts coming out and maybe talking about it. It did one of those red dog reversals on Friday. If you look at the chart of the stock, it broke below 43.78 and reclaimed it, giving you a bottom tail and volume. So as a trader, if you're looking for a trade, that was your first real signal in a while to maybe be long. So now you're getting this gap up, and you see how it fills the gap that's in front of it up to about 47, 48. If you did it for a day and a half trade, maybe take some off into the upgrade. If you bought it as a swing trade, then trade it versus Friday as well, which is a little bit south of 41, and see if it builds.
It's so interesting coming out of our chat room right now. Some of our listeners are saying that no one has mentioned Twitter yet today, but you did in your morning notes. So can you share with us what you're seeing in Twitter?
Well, Twitter hasn't acted very special, ever since the April, May breakdown. It tried to consolidate in the mid-30s and broke down again. And then you did have, on that August 24th low, a pretty capitulatory low. And since then, it's been getting tight again, and it's also held a little higher. So, when I look at Twitter sometimes now, it's not like a swing trade, it's not an over-focus, but when it gets tight, it's worth looking at. So some guys asked me, if I could put it in there. I said, listen, if you're long, be long versus 26.40, which was last week's pivot low, and if you're looking for some type of trade or continuation to the upside, it's got to clear the 21-day, which is around 28.20, with volume, because it's been below that, since late August, and then maybe you get a little bit more traction up to resistance, which comes in around 31.50. But for now, it's just really has to prove itself as it's something more than just a trade. And there is a little bit of an inverse head and shoulders pattern developing where above 28.20 could be the neckline, and that could be a decent push for it to get into the low 30s.
Another stock that kind of seems like people haven't been talking about too much lately, Tesla. You also mentioned that. Can you share us your thoughts on Tesla right now?
Yeah, Tesla, it broke down. It got hit hard when all the volatility hit. But what I've been doing lately is I've been looking to see, after that, the bungee cord lower and snapback, which names held up the best thereafter. So that August 24th low, it got hit like everything else. But look, in the past week and a half, it's held higher, and it's kind of building a nice descending channel where if the market's going to have any power, maybe this one breaks to the upside and can give us clues that the wedge and the spiders, which maybe we can go over after, breaks to the upside versus the downside. So for Tesla, it's on my radar for this week. If it could break above 254 with heavy volume, that would tell me that the market's acting a little bit better. Just to show you the opposite, look at Netflix. Netflix has been on, it's been on our go-to list for a while. It had that snapback also from the 24th, where it went from the low, the high 80s back to 120, but then, look how it's fallen back down towards those lows, showing relative weakness. So that one has been weaker since the bungee cord low. So that's more, hit or miss, where even some guys might think if you could break below 97, stay below it, it could be, a short again, because I think guys have been looking at it more short ever since that Citron article versus long. But big difference between how Netflix held up and Tesla since that bottom, and obviously Tesla held up a lot better than Netflix during that same last period.
I'm so glad you brought up Netflix, because that was something we were talking about earlier on the show, is some of these fallen darlings in Wall Street right now. Of course, we already talked about Netflix. GoPro is another one that we were mentioning earlier. Can we get your quick thoughts on GoPro?
Look at the chart of GoPro. I would just say, for all you viewers out there, I want you to take a look at the bull flag type pattern, and look at the day on August 11th. Look at that engulfing big bar that basically took out that entire upper flag. Because I was looking at that constructively, a few sessions before it, and then all of a sudden that one candlestick that engulfed the entire range that below the 8 and 21 day had me say, what, to me, GoPro's done. And that was around 60. And then not only did it go below it, it stayed below it on the retest. And that shows you when money leaves a momentum name, because momentum names are great when they're great, but when they change, you have to be aware of that. And ever since then, it's acted, pretty poorly, all the way down to where I guess the low was on Friday, which hit 31.32. I did see some kind of upgrade on it today. I feel like at this point it's a broken name, and maybe if you see some kind of oversold bounce, there's resistance around 37. So if you didn't get caught in it and you want to try and play a bounce, which is dangerous in broken names, maybe you could see a move up to 37. But again, look at that candlestick back on that day right there. That was your signs that GoPro could be dangerous moving forward, and it proved to be so.
One more that we were also talking about this morning, Shake Shack. I know we've talked about it with you on this show before, but I would just love to get your thoughts on Shake Shack right now. Of course, a lot of people think that even though they do have pretty good same Shack sales, as they say, it's overvalued.
Yes, this name has been overvalued since it came public, and it's traded differently throughout the course of its trading life, so to speak. The first part of its existence, it was above the 8-day, above the 21-day. Shorts were trapped, and you had an awesome move from what, 50 all the way up to mid 97s or 95s. And I remember, because I got short on that day, that no one could get a cover. But anyway, that's when they squeezed everyone out. And then when it broke below 75 in June, technically it lost the 8-21 day, and then it was in a downtrend thereafter. And then pretty much it tried to bounce, and then you had that outside day on earnings, which was on August 11th. That was it saying again, or it could have been the secondary news that, stay out of the way, just maybe there's a trade. But if you look, I guess, on Friday, it gave you a calculated move above that lower wedge. And if you see that lower pivot about 51 and gave you a move up to almost 56. Now, if it's going to be worth staying with at all, you want to see it hold the top third of Friday's move. So you would think maybe it holds 52.50. If it holds 52.50, maybe there's a little bit more continuation back up into the low 60s. But this, again, is a dangerous hold. It's been broken, and there's a high valuation, expensive stock. So when those are below the moving averages, you treat them as day and a half trades. Otherwise, you avoid.
You also mentioned Fitbit this morning. Holidays are coming up. This might be something, it fits into like the fit fashion trend. Maybe this is the time when people are going to start really buying those Fitbits for, their friends and family as the holidays approach. But tell us what you're seeing in the stock right now.
It kind of goes with my theme of like what held up well after that August 24th bounce. Like everything else, it came in down to 30, bounced all the way back up to almost 40. And then if you look at the few days after, it came right back in, and it's almost right at those August 24th lows. So I'm thinking that, this isn't holding up well, and it's relatively weak. It's below all moving averages, so you have to be careful there. I know it got upgraded, I think, last week and couldn't even hold that. So, you could be trading it versus 30.50, but overall, this pattern, I guess some bulls could say there's some type of double bottom versus when it came out. But it doesn't show anything constructive to the long side except for, you have support from that August 24th lows, and I would use that as your pivot area to trade against, which is around 30.50. If it wants to break this little downtrend that it's in, it's going to have to get back above like 34-ish with some kind of force and potency and volume. It tried doing that on September 8th, but as you can see, that gap up led to nothing. So you want to see some kind of igniting bar that then shows commitment to it, and you haven't seen that in Fitbit for a while.
You mentioned a couple of other fitness athletic stocks this morning. Under Armour. What's your take on Under Armour right now? Again, I'm looking to see what's holding up well, if there's any leadership, and look at the move from the August 24th lows back, went to the low 80s, snapped back into the 90s, and then it's held up perfectly since. So you have a decent flag type pattern there. So if the market's going to be any good and it needs some leaders, Under Armour, if it holds 94 and starts to break above, just say 97, 98, it'll show you that some stocks can actually be bought higher on strength, which you haven't been able to do for the last week or so. You can almost put Nike in that camp too, where it's tight. Yep.
It's had a big snapback move. It's holding in there. It's reclaiming some moving averages. It's trying to get better. So for Nike, if you're in it, be long versus 108. Actually, say versus 109 if it gets above 112. It could, show some leadership, and then just to throw in there something that looks like similar on the chart to Under Armour and Nike. Look at Starbucks. Starbucks had a huge move lower, snapback, didn't give back anything, and actually closed on the highs of last week. So, those I would deem, in the go-to stronger basket versus go-to weaker basket.
Scott, I want to get your take on oil right now. Goldman Sachs came out last week and called for $20 oil. What do you think of that?
I don't know. I don't like their call of that. I feel like there's something going on behind the scenes there because, oil gave you a nice potent move off the lows in late August. You look at that igniting bar that came out on August 27th, gave you a 3-day move, and it's been consolidating nicely. I guess they don't want the market to go higher because if oil made new lows, it would probably be bad for the oil names and the debt market, et cetera, et cetera. So they've been wrong before. I remember being short maybe oil when it was like 120, and they said it was going to go to 150, and obviously we know what happened to oil after that.
Right.
So, first, though, if you want to just take them out of the question, you go to the USO. If the USO could hold 1380, I feel like you could see some bullish guys trying to be long oil. There's a nice little bull flag developing here, but that flag would be null and void if it closed below 1380. And if you want to take a quick look at the XLE, which trades with oil, it has to hold 6250 in order to keep some interest here for perhaps more upside off the lows. So if the USOs break 14 and the XLEs break 6250, and you see some of those go-to names, lose traction, then it'll probably give us some clues that the wedge that's been building in the S&P might resolve to the downside versus the upside. So that's why I'm trying to put the classes together, strong stocks, weak stocks, on top of the wedge in the overall indices to give me some clues which way I could jump on if resolution happens closer to Thursday.
Take a quick look. Let's take a quick look at some of the bigger oil names. Exxon.
Okay, Exxon looks very similar to the XLE. Big move off of the 6650 area. It's trying to hold higher. I would only consider being long this as a trader if it could hold above 71-ish.
Last thing I was interested in getting your take on, we've mentioned a couple of people think that, looking at the financials ahead of a Fed week, you mentioned JP Morgan in your morning note this morning. What do you think about JP Morgan, and will you be watching anything else in the financial sector?
Well, you want to see if they can do liftoff. Usually the banks act well, and recently the banks haven't acted anything special. Early in the year they showed a little relative strength because people thought liftoff had to happen. Now, it looks like they're acting hesitant. Most of these stocks look exactly the same. They all have these inside wedge-type triangle ranges that, could be resolved up or down. At this point, I think the jury's out. So with JP Morgan, which tends to lead the banks, you can draw your little pattern there. And if JP Morgan starts to break below, to say, 60-50-ish, that range could be resolved to the downside, and that would put pressure on the overall indices. If it gets above, to say, 63, chances are some money's coming back to the banks, and that could give you some indications that the spiders or the S&P could break above 1990 for maybe a retest of 2020, 2040. So in closing, since I got to jump, I want to just go quickly over the spiders. Spiders right now have a very, very tight range. They had an outside day last week when it broke above 198 and couldn't hold it, but they couldn't get any downside follow through. So I think the 3-day floor in the spiders is very important. That's 194 and a quarter. If you happen to be in some swing longs, maybe give it to 194 and a quarter, but it closed below 194 and a quarter. I think some people will take some risk off, and also maybe get even short, thinking that we get that retest of the lows versus the retest of the broken areas.
We've been on the line with Scott Redler. He's the chief strategist at T3 Live and T3 Trading Group. Scott joins us every Monday and always gives it to us straight, just no BS analysis. So, Scott, thank you so much for joining us today. We really appreciate it, and we'll have you back next Monday morning.
Sounds great. Thanks for having me. Good luck this week.